Hi there. I am Melissa, and I am with the MBA in CED program at Cape Breton University. Today I'm going to be talking to you about L Brands and their current operational strategy, as well as some critiques that I have after doing an analysis of the organization. And I'm going to be recommending 3 strategy implementation that I feel that they should follow in order to bring themselves out of the decline that they are currently facing. So L Brands was founded in 1963 by Leslie Wexner in Columbus, Ohio. It was originally called The Limited, and sometime after that, it switched its name to Limited Brands, and then again to L Brands. So they operate under 4 core values. The first one is the customer rules. The second is passion leads to success. Inclusion makes us stronger, and it matters how we play the game. So up until 2008, they only operated in the United States. They really focused their operational strategy on growth in their domestic market. So it wasn't until 2008 that they actually crossed borders and started operating in Canada. And it's not only until recently that they have actually focused on their international markets. They're using wholly owned stores, franchise partnerships, and direct businesses in order to penetrate this international market. So like I said before, their current strategy has been maximum growth and dominating their domestic market. They have been able to expand through invention and acquisition of other stores such as Victoria's Secret, Bath & Body Works, Henry Bedell, Pink, and a couple others in which they've actually sold up until this point. They use the profits from their successful businesses. They use it to invest in Victoria's Secret, which is their lead brand of the organization. And they're facing some scrutiny by shareholders right now because of their discontinuation of their swimwear line, as well as their apparel line back in 2016. So they have been facing declines in their earnings per share, as well as their profits since that time. So I have done an analysis, and at this point I'm going to share with you that analysis and give some recommendations on how I think that they can bring themselves back out of this tailspin they've been in. So currently they still operate under direction of Leslie Wexner and some other executives who are highly knowledgeable, and they pride themselves on a prestigious management team who believe in the core values of their organization. They have actually decreased their executive compensation from 2015 to 2016 by roughly 41%. And I believe this is due to the decline in their stock price because of their discontinuation of some of their lines. I do believe that they should adopt the philosophy of Yvon Chouinard, which is Patagonia's founder and current CEO. And he says that you can train skills and build knowledge, but the passion for an organization and the values behind it aren't teachable. So essentially, he hires people who are passionate about the values and what the organization stands for, and then he teaches them business, which I think is something that Limited Brands, or L Brands, sorry, could learn a lot from. So just a little bit of a TOES matrix. So we looked at the strengths, weaknesses, opportunities, and threats of the organization. And some of their strengths is that they actually pride themselves on being customer focused. So that's one of their main philosophies, is that they sell a service and not a product. So they are highly skilled in customer experience. Their products are very exclusive to their stores, and so you can't get them anywhere else. They have control of the prices of their products. Some of their weaknesses are they actually lack quality, even though they brand themselves as a high quality organization. They do lack quality. They only have a US website, so anybody who lives in Canada or in any of the other international markets in which they operate in, they have to buy from the United States. So this causes massive customer confusion and a little bit of frustration because the promotions are different, the prices are different, and it just causes confusion all around. They have slow replenishment, especially in the busy times of the year, such as Christmas, more specifically, slow replenishment of popular products. And they have a lack of knowledge in the sportswear market. So I had mentioned before that they discontinued their swimwear and apparel line. They did this to focus on lower priced products such as sportswear. So that's definitely one of their weaknesses, is that is not a market they should be operating in, or not a segment, sorry, that they should be operating in. Some opportunities is stronger online presence, absolutely. Following some rising trends such as more organic products and more philanthropic avenues, flagship stores for online orders, and bringing back that swimwear and apparel line that I've spoken about a couple times. Some threats, obviously, with any organization, it's going to be inflation and that decrease in disposable income, especially with the specialty retail segment or sector. They need to make sure that the disposable income doesn't reach a point where consumers can't buy products from Victoria's Secret and Bath & Body Works and those items, because realistically they're a want and they're not an essential need for life. And increased product control regulation. So they do currently follow, obviously, regulatory quality controls. But if they are just scraping by and meeting these quality controls, then a threat would be that there's increased product control regulations and that L Brands doesn't meet this. So a little bit of a financial analysis over the last 5 years. As I had said, in 2016, they discontinued their swimwear and apparel line. That made them take a big hit in their revenue. It dropped from 2016 to the first quarter of 2017, as well as the second quarter. And their cost of revenue, which made up 57% of L Brands' total fiscal revenue in 2016, it's 59% in 2017 in the first quarter, and it went all the way up to 60% in the second quarter. So they're spending more money to make that revenue, and they're not making any more revenue. Even their total operating expenses, they have had a steady increase from 2013 to 17, with a little bit of a drop in 2017. And their EBITDA is falling. So it has been falling since the beginning of 2016. So it's down from $2,725,000 to $2,608,000, and again in the second quarter of 2017. So as far as their dividends, they are still paying out dividends and have been able to keep a steady increase on the payout with those. So their dividend was $1.36 in 2015. In 2017, it's now $2.40. So they've still been able to increase that. However, their earnings per share, so the value of those shares, is actually declining. So it went from $4.22 USD in 2016 to $3.79 in 2017, and that's expected to continue to drop. Their overall growth has took a very evident hit. That has been their whole operational strategy, is maximum growth. So they took a nosedive, like I said, in 2016. They went from a positive 15.33 thousand growth to a negative 26.7, and then down. They went back up a little bit, but still in the negatives at negative 16.33 in the second quarter of 2017. So they haven't been able to recover that. So they definitely need to implement a strategy to bring them out of that decline that they're facing. They have a little bit of a gap in the cohesion of their strategies. So their marketing strategies, they market it as high-end luxury goods that are exclusive to their stores, which is very true. They aim to make women feel strong and independent and to be able to pamper themselves with these personal care items, and also offer the ultimate shopping experience. They're financial. They invest profits from their brands such as Bath & Body Works, and they invest them into Victoria's Secret to be able to market and to promote that, especially with the big hit that they took. And then their research and development strategy. Again, they focus on the research and development for Victoria's Secret products, and they actually reuse and recycle the current formulas at Bath & Body Works, which saves them a lot of overhead cost, so that they're able to use their money and their cash flow for their Victoria's Secret brand. So the gap comes where their strategy is, because they discontinued their swimwear and apparel line, which fell in line with their high quality, their exclusivity line. They discontinued this to focus on a lower price segments that doesn't fall in line with their marketing strategy to promote that high quality and luxury goods that are exclusive to their store. I mean, you can buy sportswear anywhere. It's not exclusive to limited brands, nor is it really a luxurious good to be going in and buying, your spandex to go to the gym. And so there's definitely a little bit of incontinuity there. So all of this in mind, I have outlined 3 recommendations for L Brands. My first would definitely be to expand their online presence in Canada and focus on their current online presence that they have now. Forbes actually addressed this concern, and they said that they have a concern of the lack of online presence, stating, "The company is also too dependent on its physical stores," so their bricks and mortar, with only 20% of their sales actually coming from the direct channel. Victoria's Secret is falling behind in capturing the online lingerie customer. So I understand that their current strategy is to deliver that exceptional and incomparable customer experience, and that they sell the service and not just a product. But in the generation of millennials and the fast-paced lifestyle that we all live today, they're not going to be able to compete in the current market, and they need to be able to compete on all of these platforms. They build brand loyalty with these customers in store, and they maintain their brand loyalty by allowing them to shop online. And it's just the convenience of their home or wherever they may be. It's what people are looking at in this time. Alternatively, this would actually increase the customer satisfaction, because if the store is sold out of their popular products, then they can actually order it online instead of becoming frustrated and then losing a loyal shopper. So that's recommendation 1, is expanding an online presence to Canada and focusing on their current online presence. My second would be to open flagship stores. So this kind of coincides with the first. And it would be to allow the customer to shop online and then to have their product delivered to a flagship store, or they get that product delivered to their home free of charge. So they could either have the flagship store in-house, so in their current locations, kind of like a Canada Post. You could order your product, go pick it up, and it would be free of charge to get it delivered to the store. If you get it delivered to your home, sorry, I think I mixed that up. If you get it delivered to your home, it would be charged based on your home in relation to the nearest distribution center. So the shipping and handling fees would differ depending on whereabouts your location is. This relieves L Brands employees from putting effort into customers who already know what they want. So there's nothing more frustrating than walking to a store and having somebody ask you if you're finding everything okay or what you're looking for when you already know what you're looking for. So this eliminates that, and it allows L Brands employees to focus on customers who are maybe new to the products or aren't entirely sure what they're looking for. And it's going to be more efficient for everybody, and it's going to keep our customers happy. So this service, I would recommend doing it both in Canada and the United States, maybe doing a trial in the States and seeing how it rolls out, and if it's successful, then expand to Canada, and so on and so forth. So my third recommendation would be to increase the quality of their products. So as I said before, even though they advertise that their products are high quality, and they are, but they also advertise their organization as a very philanthropic organization, which I believe that they could be doing more of. One of their main Bath & Body Works competitors is The Body Shop, and they are renowned for being supporters of groups such as like Against Animal Cruelty, They have a lot of these organizations. They are supporters of fair trade, and instead of spending all of their profits in marketing Victoria's Secret, they should be allocating some of their funds to their research and development. I know they're recycling patented products and making new scents for Bath and Body Works. However, if they reformulate the products, they could reformulate them more organically and tap into a whole new market. So not even just follow the trend of higher quality and more fair trade products or organic products, but try to actually lead that upward trend and be able to compete on that platform as well. Lastly, given that financial analysis that I was talking about the discontinuation of swimwear and apparel, I would highly recommend bringing these products back and just selling them as an online exclusive. They lost an estimated $500 million by discontinuing these products and focusing on the lower price sportswear and bralettes. Our brand strategy is to make women feel special and to provide them with luxurious products, and sportswear is not their business, and they should focus on their niche and provide them with the massive growth that they've received thus far. To compete in the sportswear segment, you're looking at competing against Nike and Under Armour, Adidas, Reebok, Lululemon, just to name a few. These are industry giants, and they have been in the game a long time, and all brands simply cannot compete with the customer loyalty that these organizations have already instilled in their customers. And L Brands should focus on what they're good at, and that is empowering women to feel beautiful and to feel independent and strong, and promote that and compete in that segment, because currently it's showing that the discontinuation of that swimwear line is making them lose massive sales. So that would be my last recommendation, would be to bring it back as an online exclusive and see how that pans out. And if it's received very well by customers, then maybe think about bringing it back in stores at a couple locations. So that wraps up the presentation and the recommendations of L Brands' current operational strategy, as well as some critiques that I have and some suggestions to help them come out of this nosedive that they are currently in because of those line discontinuations. I hope you've enjoyed, and I hope you have a great day. Thanks so much.